Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning, everyone. So welcome to the 14th meeting. It's about hedging. So the material is actually on the book, chapter 11, with the title about multinational accounting, foreign currency, transaction, and financial instruments. Right, so this chapter will be talk about we hope that at the end of the class, you guys are going to be understand about how to make the calculation using foreign currency exchange rate. So this chapters was actually focused when there is kind of a transaction between a company in one country and another country. So probably they have a branch or probably they have a subsidiary. So there is a difference in the currency. So that's why this chapter will be talk about, hope that you understand about the calculation using foreign currency exchange rate. And then the second ones, we hope that you guys understand about how the accounting implications, and you guys have to be able to make the calculation related to the foreign currency. Right, so when there is a transaction happen, so it's going to be an effect. There is an effect. There are several reasons probably so that makes there is an accounting implication to the performance of the company itself. And then we hope that you guys understand how to hedge international currency risk using foreign currency forward exchange financial instruments. So what do we mean by hedging here? Is a situation when the company wants to protect probably. So, the currency sometimes has been, changed over time and come up with this several problem probably happened, and there is a risk in there if there is an increase of the currency or probably there is the decrease of the rate itself. And then we hope that you also have to know about how to measure hedge effectiveness, right? So that's actually the chapter will cover about. So we talked about the situation when there is a companies, either it's large or small, they will end up with depending on international market, right? For buying a goods or probably selling their products and services. However, there is an impact happened during the business running in terms of the effect of export or probably or import activities, right? And this is will be caused a several problem, right? And then give also more risk for the company itself. So so if the company operating in international markets, so absolutely is going to be, there is a normal business risk in there. Like first one, there is a lack of demand for the each product in the foreign marketplace, right? And then probably there is a transportation delays in getting a product to foreign customer. So I haven't experienced import some such product from China and also Thailand when I run a business in 2012 and 2014. So that was of course there is a difference in terms of the exchange rate, and transportation delays is actually also the main important problem, since we have to wait almost 1 month or probably 2 months until the product arrived in Indonesia. And after it's arrived in Indonesia, we also have another order from out of Indonesia, like I think the nearest one is from Malaysia and also Brunei or some. So there is a foreign currency risk also in here, right? So it's if it's a transaction conduct in other currency, right? So you have to set the price based on the currency. Right? So if probably you put the price around 200,000 rupiah. So if a Malaysian want to buy your product, so you have to, convert it to their exchange rate. And you have to also understand about the risk, all right? So if I can give an example. So for example, there is a US company. They want to acquire a machine on credit, right, from Italian manufacturer. So there is an Italian company will require payments in euros, right? It means that US company have to use a foreign currency broker, right? So, or probably there is a bank to exchange to US dollar for euros to pay for the machine itself that they want to buy in Italian manufacturer. So in this situation, US company will experience the foreign currency gains or losses, right? Why? Yes, because there is a fluctuation will be happened in the value of the US dollar related to the euro. Okay, so that was kind of the situation. So you can imagine a lot of transaction happens. So what will be happened in the foreign currency exchange market? Okay, and then yeah, now we move to this accounting issue itself. The accountant have to able record and report transactions that involving an exchange of the US dollar and the foreign currency, right? So what are the foreign currency transactions? So there are sales, probably purchases, right? And then there is a transaction giving rise to transfer of the foreign currency or record as receivable, payables, right? That are denominated in stated foreign currency, right? And then, okay, so based on you've been, seen on the screen. So foreign currency transaction of US company denominated in other currency must be restated to their US dollar equivalents before they can be recorded in the US company books and included in the financial statement. So this situation, you can just imagine when there is a sales and purchases happened in the transaction of the company. So the currency has to be restated. Probably there is an transaction happen in Japan, right? So before they can be recorded to the US company book, so they need to restate it to the US dollar equivalents in financial statement, right? So when the process restating foreign currency transaction to their US dollar equivalents, we call it translation. Okay. All right. So at the situation when the many US corporations have multinational operation, the foreign subsidiary prepare their financial statement in the currency of their countries, and the foreign currency amounts in this financial statement have to be translated into their US currency, US dollar equivalent, right? So many large US corporations, they have a multinational operation, right? Of course, they have a branch, they have a subsidiaries, foreign based. So for example, there is in US, the auto manufacturing probably, so they is focusing in auto manufacturer. So manufacturing subsidiaries probably in China, in Canada, in Mexico, in United Kingdom. So the foreign subsidiary prepare their financial statement in their home currency, right? So for example, in United Kingdom, they prepare it in pound sterling. So like Mexican subsidiary report in peso, right? So the foreign currency amounts and financial statement of this subsidiary have to be translated, right? And they stated, then restated again, right, into their US dollar equivalents before they make a consolidation of the financial statement, right? So they're going to be use the US dollar as a reporting currency unit. Okay, so this will be talk about the chapter will be cover about the accounting procedure for recording and also reporting foreign transaction. Okay, all right. So the next one is about the foreign currency exchange rate. So the foreign currency exchange rate between currency are established daily by foreign exchange brokers who serve as an agent for individual wishing to deal a foreign currency. So yeah, we knows that probably in several years ago, and based on the history, so the currency usually value in the basis of a gold standard, right? So they valuing before the based on international value, based on the how much the gold for per ounce, right? So after that, around 1972, most countries signed the agreement. They want to make value of their currency based on the supply and demand of that currency, guys. So there is a foreign currency exchange rate. So it's between the currency are established daily by the market, right? It consists of foreign exchange broker. So this is an agent for individual country that have to deal with the foreign currency itself. So yeah, several countries probably can maintain the fixed exchange rate, or they have established the minimum and maximum rate, right? So probably there is any countries that have fixed exchange rate for dividends remitted outside the country, right? So there is several reasons for that situation. All right, so I think I'm gonna move to the next video since the Zoom is limited. All right, so please continue it.